Well, Starbucks recently announced that it was cutting around 1,000 members of its corporate workforce, and that has been a trend so far here in the early part of 2025, with numerous other companies also focusing on corporate layoffs. But the question is why? Pleasure to be joined right now by Matthew Bidwell, who's a professor of management here at the Wharton School. Matthew, great to catch up again.
Good to see you.
You know, it's interesting because we hear about layoffs a lot, especially in the beginning part of the year. I don't know if we necessarily hear about it in the corporate perspective. So give us your read on what we're seeing play out here in these first few weeks of the new year.
Sure. I mean, so first off, I was digging through the data yesterday. So the government produces its JOLTS data on layoffs just to see kind of what's the trend. Historically, they're very low. And so we are seeing this news on layoffs coming through. They've moved up a little bit over the last year. But if you look at the last 20 years or so, we're still in the world of pretty low layoffs, but they are constant. I think for quite a while, they've been a regular tool that corporations use. It's kind of a, somebody who's not very good at dieting, kind of that sense of they go on a crash diet, or we've got to trim all the excess and kind of really get ourselves back on track. And then they start hiring again. And after a while, they kind of go, oh, no, this has all gone wrong. And so we seem to go through these cycles. So maybe this is like dry January for corporations or something like that, where they kind of say, and it is, I mean, there's definitely a tendency, I think, in all organizations for administrative bloat. No matter how much we want to avoid it, there's always more work to do. And as you hire more managers, there's more things that they kind of see need to be done and so on. So you can see why every now and then organizations do kind of want to pause and say, okay, we added a whole lot of activities. Which of these do we still really need? And are there kind of places where we think maybe we've invested a lot in things that we no longer need? So it happens.
Is there more focus than this time around? Because it seems like it is geared towards corporate layoffs. And obviously you will see a lot of layoffs in various elements of business. I saw one CEO called this an unprecedented kind of move. Is it unprecedented or maybe not so much?
I don't see it as unprecedented. I mean, I think it's been kind of a common mantra over the last 10, 20 years. We're taking out middle management. We're taking out administrative bloat. Yeah, if you're not doing corporate layoffs, you're doing layoffs of frontline workers. And then you've got to start explaining, why are we cutting stores? I mean, in some ways, certainly if I'm an investor, that worries me, right? You come in, you say, we're laying off the front line. Okay, so that means less revenues coming in. That's bad. You say we're laying off corporate. We have the sense of, oh, it's overhead, it's bloat. I don't think all corporate is overhead and bloat. There's a real risk when you lay that off, you do a lot of damage. But I think it's certainly a more comforting message, I think, for external stakeholders. We're not damaging kind of the core business or cutting into the core business. It's other things.
Is there a component of this also that with all the dynamics of the workplace and remote work and some of these other dynamics that we're seeing kind of a repositioning, maybe to a degree going back to what we saw before the pandemic of what companies expect in terms of the employees being in the office, of the performance component as well, maybe even being focused on a little bit more also?
I mean, I certainly wouldn't be surprised if during these layoffs, kind of where people are starts to play a role. I mean, again, if you actually look at the statistics rather than the news stories, you get a very different picture of remote work and return to office. So kind of data from badge swipe systems suggests that office occupancy still hasn't risen much above 50%. And it's been hovering around that level for the last 2 years. There's a survey by Nick Bloom and colleagues at Stanford that asked people where they worked last week. That seems to show kind of the proportion of total days being worked in the office. Again, it's been bopping around between about 26 and 30% for the last 2 years. So yes, I think it's in people's minds. The labour market has softened. We went through a period in 21, 22 where you just couldn't hire anybody,
right,
where there was so much competition. and where CEOs felt they had no choice but to give their workforce whatever they wanted. Now, when you look at kind of numbers of job openings, they're back down to pre-pandemic levels. And so I think those CEOs that never really liked this idea, they are seeing kind of, okay, now's my chance to actually bring people back into the office. So I think it may play into some of these calculations. I'm not sure it should, but it may.
Talk also about the timing component of doing this in January, because for many corporations, their calendar year or their fiscal year will end December 31st. Are companies conscious of making these types of moves, especially at the end of the year and around the holidays as well?
It's a good question. I don't know. Yeah, I could imagine doing it just before Christmas probably doesn't lead to fantastic headlines. I mean, a lot of companies also, they make a lot of their money in the holiday period. I don't know what that looks like for Starbucks, for example. But, if you're anywhere close to retail, consumer, you don't want to mess with anything during the end of the year. You kind of want to make sure you're at your peak. This is going to be a quieter time of year. And so if I'm going to do big reorganizations, big layoffs, I probably want to be doing it around now, when generally there's kind of less pressure to deliver revenue instantly.
Is the expectation that, and you mentioned that this is somewhat of a pattern, that this is a pattern that continues, that corporations believe that this is the way to handle these types of situations at this time of the year?
Yeah, I mean, I certainly think we've always seen layoffs. We will continue to see layoffs. There's good and bad, right? I mean, every layoff is destructive to the people involved. And I will say kind of the research on the effects of layoffs is deeply depressing, right? In that I think there's kind of really long-term negative effects on people's earnings. But, we have a dynamic economy, all the creative destruction and so on. Corporations will build up certain areas, and over time they will decide that those investments are not paying off and they want to cut back. And so that happens. I'm not sure corporations are always as thoughtful about this as they should be. I've been very depressed over the last few years. You saw post-pandemic, particularly with some of the tech and consulting firms, they kind of hired everybody in sight and then turned around within about 6 months and went, whoa, we've got too big, let's lay everybody off again. I kind of think a little more forethought would be helpful here. It is the case. I mean, corporations used to kind of pre-1980s, corporations avoided layoffs at all costs. They have become a bit more common, particularly among the white-collar workforce. I still think they're not something you want to do lightly. But on the other hand, the world changes, what businesses need changes. So we're going to continue to see these.
Matthew, great to talk to you again today. Thanks very much.
Good to see you.
Thank you. Matthew Bidwell, Professor of Management here at the Wharton School.